Who wants to pay taxes? No one, right? But is it possible? In some cases, I would say yes, it is possible to pay zero taxes. For that, what you have to do is bring down the taxable income under 5 lakh in the old regime or under 7 lakh under the new regime. But how to do that? Let's figure out. Welcome to our channel 5 Minute Finance. In this video, we'll discuss ways to reduce your tax outgo to the minimum or to zero if possible. Now, whether you will be able to reduce it to zero will totally depend on your income and some other factors. But what I can assure is that towards the end of the video, we'll work together to maximize your tax savings right here, right now. Yes, you heard it right. So 5 minutes later, I assure you tax savings of up to 78,000 in this year. So sit tight and see the wonders. So first of all, if you're earning slightly above 7,50,000, just check if you're eligible to claim deductions allowed under the new tax regime. I've already added the standard deduction of 50,000 rupees. So other deductions could be like deduction on interest paid on housing loan on rented property and not the one which you have occupied for self-use. Then there is deduction on employer's contribution of up to 10% of your salary to National Pension System NPS. Next is tax exemption on leave encashment, and then if you have received gratuity or voluntary retirement, that is also tax exempt to the specified limits. So after claiming the applicable deductions including the standard deduction, if your taxable income falls under 7 lakh, you can opt for the new regime and pay no tax at all. Now, if you are earning higher, you can claim various deductions and expenses incurred during the year under the old tax regime and try to maximize your tax savings. We'll see various deductions that you can claim here and figure out how much of your income can become totally tax-free. So first is the standard deduction of 50,000 rupees, for which there is no need to make any investments. You can claim it just like that. Then we have the most popular one, deductions under section 80C, which allows us to claim deductions up to 1,50,000. Now you can either claim this deduction on certain expenses or make investments for the same. Expenses like children tuition fee, payment of life insurance premium, and investing includes investment in equity-linked savings schemes, ELSS funds, certain small savings schemes like Public Provident Fund, Sukanya Samriddhi scheme, and so on. The list is quite big. This takes you to total deductions of 2 lakh rupees. Next, by investing 50,000 rupees in the National Pension System, you can claim an additional deduction under section 80 CCD2. So as you can see on your screen, now your total deductions become 2,50,000. Then you can save taxes on premiums paid towards your health insurance. Here you can claim a maximum 25,000 rupees on premium for policy for yourself, your spouse and children. Additionally, if you're paying a premium for your parents' health insurance policy, you can claim an extra 25,000 rupees. And if your parents are senior citizens, you can claim up to 50,000 as deduction. Now this brings your total deduction to 3,25,000 rupees. Then suppose you have bought a house and have a home loan. You can claim an additional deduction of up to 2 lakh on interest paid on home for a self-occupied property. So adding the 2 lakh deduction, your total deductions become 5,25,000 rupees. Next comes deduction on interest on savings account under section 80 TTA of up to 10,000 rupees. Here you must be clear that this 10,000 does not include interest earned on fixed deposits. Then these days, most of us are associated with some or the other social cause. If you donate towards it, you can claim a deduction under section 80G as well. So let's say you donated 10,000 during the year. So this takes your total deduction to 5,45,000 rupees. But that's not all. While we have spoken only about the most common ones, there are close to 70 deductions and exemptions available under the old tax regime. Some more deductions which are quite common but we could not show here as their amount varies from one person to another, like your deduction on house rent allowance. So if you are paying rent and HRA is part of your salary. Then there are exemptions like conveyance allowance received for office travel and other office perquisites can help you save even more taxes. So we can say that if you are earning around 12 lakh rupees a year via salary and you are eligible to claim most of these deductions, you can plan your taxes well so that your total liability becomes zero for the year. If you are earning higher, well, then you can aim to minimize your taxes. With this, I remember I had promised in the beginning of this video, I'll tell you how to save up to 78,000 rupees of taxes this year. So buckle up for the climax. Well, it's simple. You can use the tax savings maximizer tool on ET Money app. Based on your needs and existing tax saving investments, ET Money will give you personalized recommendations. And guess what? You can do all this in 10 minutes, that too 100% paperless. And what more? Well, you can get your tax saving proofs immediately. So don't delay and do it right now. It's only a matter of a few minutes. So compute and let us know in the comments below how much tax you can save. We'll be sharing more such videos which will give you tips and tricks to help you in your tax savings. So don't forget to subscribe to our channel 5-Minute Finance.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.